So today I'm going to demonstrate how to build a cash flow forecast using Excel. If you haven't done so already, then please take a look at the video that forms part 1 of this presentation, where I give some introductory information. I've preloaded Excel with the model in various stages of completion in order to keep things moving along swiftly. I'd suggest you view this video full screen in order to get the best picture. So, to start with, we put in a title for the spreadsheet, and for the first weekly column we're going to do the forecast in weekly buckets ending on a Saturday, as that's what most businesses need. We're doing this in mid-August 2013, so the coming Saturday is the first date to include. We then allocate a few rows for receipts and a few more for payments, with a subtotal at the bottom of each one. Net cash flow is receipts minus payments. We then enter a figure for the opening cash balance. I'm assuming we have £100,000 here. Then closing cash is opening cash plus or minus the net cash flow for the week. Now we enter the formulae for our second week. The date is the previous week plus 7 days. Total receipts, total payments and net cash flow, just copy across from the previous column. Opening cash is the previous week's closing cash. Then the closing cash formula also is copied across from the previous week. Then we can copy all of the week 2 formulae across to column N, and we've got our 13-week framework. We need to widen the columns to fit in the date, and then add some formatting to make it look a bit neater. So now we can start to enter some of our cash flow items. I'm going to say that we have 12,000 a week of cash sales, including VAT. And then we look at our current debtors or receivables on the sales ledger and estimate a profile of when these are going to get paid, and they often cluster around the end of the month. Then you need to take a look at your sales forecast and see what business you have in the pipeline that's going to turn into cash before the end of your 13-week period. So I enter these as uninvoiced sales, and we assume they come in this profile. I'm expecting I'm going to sell a fixed asset during this period, and so that comes in as a one-off item, and I have about £1,000 a week of other receipts of sundry items. So that's all of my receipts done, and understandably my cash balance looks quite healthy. So now let's take a look at the payments side. I've got a weekly wages bill of 7,500 and monthly salaries of 30,000 paid at the end of each month. 3 payments in the forecast. Remember, these are net payments to employees. Payroll deductions of 18,000 get paid over on the 19th of each month. It's worth pointing out that the first payment actually relates to the previous month's payroll. So now we have to have a look at our payments to suppliers, and we follow a similar approach to what was done on the sales side. Firstly, what do we have on our purchase ledger that's now payable? I'm assuming that we do a large end of the month pay run with smaller amounts going out in between. Then we have to make an estimate of what's not on the ledger that is going to be paid within 13 weeks. Once again, all of these items are inclusive of VAT. Then we need to add in direct debits that are taken out of the bank account rather than being paid initiated by us. It's worth reviewing these in some detail, as they can be very significant for some companies. We need to add a couple more lines in, as we're not quite done yet with the payments. VAT quarter runs to the 31st of August, so the bill is payable on the 12th of October. Then again, we have some other sundry payments which all come together on one line. So that completes our cash flow entry. Then, just to highlight the most important thing, I'm going to put a bit of conditional formatting on the closing cash line so that it turns red if it's a negative number. And you can see that this shows me that I've got a problem in the last 2 weeks of the period. So without wishing to state the obvious, I either need to increase my income, reduce my payments, or get some bank borrowings approved so that I fit in with this expected cash flow. For the sake of this demonstration, I'm going to assume that I've sat down with my salespeople and they're confident they can bring in some more income from November. I've adjusted the uninvoiced sales line on the forecast accordingly. So that figure goes from 65,000 to 80,000. And we can see as we swap between the two versions that the overdrawn position disappears. So we go from minus 12,000 minus 4,500 in this version to plus 3,000 plus 10,500 in this version. However, we'll of course want to keep a close eye on what happens in those 2 weeks as we move through the period until then. Good Cash Management says that you should carry out this exercise every week. Once you've got the basic model set up, it's not too difficult to roll it forward, as most of the data in the middle won't change very much. All you need to do is just copy across to add another column on the end. Just widen it a bit so you can get the date in. Adjust the second week for the dates, so just turn that formula into a number, and then put in the actual opening cash number. So I'm going to say that's 95687. Then you just delete the week that's finished, the week that's gone, and that's the model setup. The framework's all there, and you can then start reviewing it for any changes that you need to make. So that's how you pull a cash flow forecast together. If you'd like a copy of this model, or if you've got any questions, or would like some more information on this subject, then please do get in touch via our website at www.prosperofd.com. Thanks for watching.